good morning, everyone. Thank you, members and guests of the FAMP. We're very excited for part two. We had a tremendous presentation by Angel Oak last week, so we're glad to have them back to follow up on these important topics involved with non-QM financing. Quick promo for the FAMP. If you like what you hear, you like the events and things that we're doing, please consider becoming a member. You can get the information for that on ourfamp.org. Couple quick things going on with the Broward chapter. We do have a networking event coming up on February 17th down in Pembroke Pines. You can get that information online as well. But I want to keep the introduction short because I know there's a big topic to talk about here. I know you'll have a lot of questions, so I want to get right into it. First, I'd love to introduce our guest hosts from Angel Oak. We've got John Ahmed. We have Alina Dursey and Scott Brubel. I'm probably screwing up the name, so I apologize, guys. I just got the information. So thank you guys for joining. I don't think there's anybody on the call. Well, hopefully there's no one on the call that thinks, nah, I probably won't use non-QM this year. We're in a wildly changing market, and without stealing any thunder, I don't think there's a product line that's more important this year than knowing what you're doing around non-QM financing. With that, I'll just turn it over to you, John. Please take it over.
Thanks, Mike. Appreciate it. Yeah, definitely get engaged with your local and state chapters. It's really important. They work a lot on your behalf. And not only do they work on your behalf from the legislative side, but they also bring you, really, really good content. So without further ado, my name is John Ahmed. I'm a Regional Vice President of Sales here at Angel Oak, and I have the honor and distinct pleasure to work with Alina. Alina, please introduce yourself.
Hi guys, I'm Alina. I'm here in the Broward territory along with Scotty. I've been with Angel Oak for about 4 years now, and I'm looking forward to presenting the product to you guys and helping you grow your business.
Great, Alina. And then also Scott Grubel.
Hi, everybody. I'm Scott Grubel, Broward County Account Executive here, Angel Oak Mortgage Solutions. Been with Angel Oak since 2016, proudly. Here to help you guys out and excited to talk about the Investor Cash Flow Program.
So as Mike mentioned earlier, last week we did one specifically driven towards bank statements and self-employed borrowers. Well, this week we're doing just what we call our investor cash flow, but what everyone in the industry calls a debt service coverage. So by the time we're done with this, and we've allocated an hour or so, this is also going to be recorded, and we will distribute before, I believe, end of day tomorrow to you. This is very interactive. I've got an open panel here for questions to come in. By the time we're done with this segment, we really want you to be just as good as the AEs here. So really, and it's going to be all driven by your questions and our answers. So, hopefully everyone can see our website, and it's really easy to navigate. And we're going to jump right into our ICF program. Again, we call it ICF, but before we do, we're going to launch a poll here. And the question is going to be, have any of you originated a debt service coverage loan in the last 12 months? So while that's going on, I do want to share a couple of tidbits with you. About a year ago, I heard the statistic where investors were making up 17% of the purchase market. So we're really here to help you grow your business. So the poll is, wow, similar to last week's poll, we have a lot of really good, aggressive loan officers here in the Broward County. 42% say they have originated a debt service coverage loan in the last 12 months. That's probably it's probably due to Scott and Alina showing you guys how to do these programs. So we're going to let Scott Grubel cover the highlights of the program. Scotty, go ahead.
All right. So Investor Cash Flow Program, aka DSCR, Debt Service Ratio Program. To me, this is probably our second most popular program out there. Outside of the bank statement program, we see the second most amount of volume through this program. It has been catching fire. The investor community is well aware of it. And I think this is one of the key programs that can add value to everybody that's listening's business. Certainly help you close more loans and attract more buyers and referral sources. So We'll go high-level overview. Basically, as you all know, the debt service ratio program is designed for investment properties only. A baseline requirement for the program is your borrower must have at least a 600 credit score and they must own a primary residence. If your borrower meets those two baseline requirements, they can purchase an investment property with no income verification, no employment verification, and no ratios considered whatsoever. And we'll go into more detail on that. But that's the high-level overview of the program. The way the program works is we're qualifying the borrower based on the rental income that the subject property generates taken from your 1007 rent schedule. Basically, as long as that rental income covers the proposed payment, and in some cases can even be less than the proposed payment, then the loan qualifies, and we have many options to get the borrower qualified. We even have some options where, in essence, we can waive the debt service ratio. So we'll go into the details about that as well. But let's go over some of the highlights of the program. As I mentioned, it's a 600 minimum credit score. The program goes up to an 80% loan to value for purchases and rate and term refis on single families, condos, and PUDs. It goes up to 75 loan to value for your multi-unit properties. So you can do 2 to 4 unit properties on this. Loan amounts go up to 1.5 million, and we can go down to a minimum loan amount of 75,000. So if you have any of those buyers out there that like to take advantage of the small condo market, there's options available for them. Qualification, as I mentioned before, is based on the property's cash flow. Again, no income verification, no employment verification, no ratios are considered whatsoever on the program. If you have a 700 credit score and the LTV is 75% and below, as I mentioned earlier, we have the option where no debt service ratio is required. Your DSCR is in essence waived. So again, there's many options there on that part. I mentioned already, no personal income or employment verification is going to be required, so you wouldn't even have to list any on your 1003. We'll go into more detail on that as well. Another great feature of this program, properties can be held in the name of an LLC. This is a big one for investors out there. Obviously, for all the tax benefits and liability benefits, investors like to purchase and close these properties in LLCs. We're 100% okay with that. They can take title in the name of the LLC. We can go up to a dual member LLC, and in those cases, both owners would need to be on our loan. There is no limit on the total number of properties. Again, if you're working with an experienced investor, and that's what we see a lot of on this program, they can have 30 properties. We're okay with that. We're only focused on what loans or what properties they have financed with Angel Oak. So there's no limit on how many total properties they own. They can come to us and purchase 1, 2, 3, 4, 5 properties using this program or more. We can do purchase, cash out, and rate and term refi. So that's a big one. And I've had a lot of loan officers really take advantage of this because you have a lot of investors that for many years have had to either purchase using hard money or private money or cash. And we can take them out of those high interest rate loans, some of which have balloons coming up, and refinance them into the debt service ratio program, investor cash flow program, in most cases significantly lowering their interest rate, their payment, and therefore increasing their cash flow, which is really what it's all about. Side note to that, I am in contact with a lot of private money investors who love that this program can help them get liquid on a lot of those loans that they've done. So it's a win-win for everybody. 40-year fixed interest only available. This is huge, guys. So you have here a no income verification, no employment verification, debt service ratio investment program where your buyer can purchase an investment property at an 80% loan to value and do an interest-only loan on top of that to maximize their cash flow on the property they're buying. That's a huge feature. I always say it, I don't think it's used enough. Definitely one you want to make note of. We do allow non-warrantable condos on this program. There's obviously a lot of reasons that a condo project can be non-warrantable, so we'll look at those as they come in. But the bottom line is we're very flexible in terms of litigation, in terms of reserves and how we meet the reserve requirement. We'll go into more detail on that, but non-warrantable condos can be done here. Loan amounts greater than or equal to 1.5 million, a borrower's second appraisal must be obtained. So max loan amount on this program is 1.5. As long as we're under that 1.5, we only need one appraisal. If we're at that 1.5, we would need two. We're hoping that those loan amount limits go a little higher soon as well. So that's your overview of the investor cash flow debt service ratio program. I'll let John take it back from there where we can go into some more details on it.
Yeah, Scott, thank you. Really, really good overview. As I said, this is being recorded. We will get to your questions here. Luciana, I know you're asking questions about foreign nationals. We're going to get to that too here underneath the DSCR program, debt service coverage ratio program. We're going to get there. But Ian, we want to educate you and train you on all aspects of this program. So Alina, talk to us. Scotty mentioned about no income on the 1003. Talk to us how you, Alina, would love to see a 1003 come over to you.
Sure, thanks, John. So typically we try to push our loan officers to put as much information and detail as possible on the 1003. This is the one time that it's going to be limited, so it's very easy. Since there's no income, no employment, you're not going to be adding those on the application. We do want to make sure that borrower's REO is listed. The great thing about it, as even Scotty mentioned before, we don't care about how many properties the borrower owns, and only the ones that the borrower is personally liable for should be listed on their REO. So if you have a seasoned investor that has multiple properties on their business with no personal liability, then you do not have to disclose those. Please make sure REO is fully completed with all the information except the rental income. So don't forget, no income, no employment, and no income of any kind. And we also want to see the proposed information for taxes, insurance, and so forth to kind of help you get an idea what the DSCR number requirement should be at. And also obviously list all assets, because that will prevent us as accounting executives to make sure that there's no hiccups, no issues, because gift funds are not allowed on this program. Spousal funds are not allowed on this program. So it kind of gives us a better idea to see where the borrower is at in regards to that.
Yeah, great. Scotty, anything to add about 1003?
No,
I'm sorry, I'm still old school calling 1003. So.
Earl 1003. No, I think Alina nailed it. It's going to be one of the easier 1003s you guys will have to take really for a program, because like she said, you're not listing any employment, you're not listing any income whatsoever. The only properties that need to be listed on your REO are the ones that the borrower owns individually and report on credit. So if it is an experienced investor and they own multiple properties in the name of an LLC, which are not reporting to credit, don't even need to list those on the REO. It's going to be a pretty clean and easy 1003 for you guys to take. Obviously want to list their primary residence and how long they own their home. That's critical, since that's a baseline requirement for the program.
Yeah, Scotty, that's a good point about them having to own a primary, and it has to look and smell and feel like a investment property and not trying to purchase a. Go ahead, Alina.
So I wanted to add that, and we said it on the previous call, and I know Scotty read the overview of the program. Please keep in mind, as we mentioned before, that 30% of the deals that we close are outside of our guidelines. This program is a little bit more unique because it is no income, no employment, and there's not going to be too much leeway. It is going to be what you see is what you're going to get. But a few exceptions. I know Scotty mentioned that we do look at a primary mortgage history, which is kind of a main requirement. But as you know, a lot of people right now buying investment properties here that live in New York, which is more typical to rent, not own. So you'll have that case-by-case scenario exception where your borrower might not necessarily have a primary mortgage, but they are a seasoned investor and want to keep investing, but they're currently renting if it's in a big city, or even in a smaller city where they have other multiple investment properties, and you can possibly get around that by showing management that they're capable of property management.
And that's why everyone on this call, and thank you for taking time out of your day to really dive deep into learn about how the debt service coverage ratio program works. But that's also the other reason why you have to work with Alina and Scott, because they know how to close loans. Scott, let's talk about the credit. What does the credit report or credit of the borrower or borrowers have to look like?
Yeah, so we have our baseline trade line requirements, which is standard across the board for the industry, really. You're looking for your minimum credit score, of course, of 600 And then we're looking for our trade line requirements, which is going to be 3 trade lines open for at least 12 months that have activity, data blast activity within the last 12 months, or 2 trade lines that have been open for 24 months that have activity within the last 12 months. We as account executives will always check that for you first and foremost whenever you send a loan over for a pre-approval or just a credit to be reviewed. And then in addition to that, we're looking for mortgage history. We want to see that this borrower has had some sort of mortgage history before. Typically, they own a primary, there's a mortgage on that primary. I would say that's 95% of the credit reports we see, and it's cut and dry. Mortgage history is right there on the credit. In some cases, though, you have borrowers that own a property free and clear or purchased a property many years ago and paid it off. We'll be able to see that previous mortgage on the credit report. Or if they own the property free and clear, and maybe it was under the spouse's name, there are other ways we can look at that. So you don't want to immediately discount it if you don't see a mortgage reporting on credit. We want to just ask a little bit more questions. But in terms of the credit, those are really the main requirements. We're looking for that mortgage history. We're looking for those minimum trade lines to meet the trade line requirement.
Right. So we've got great questions coming in here. Yes, Luciana, we'll talk a little bit about Foreign National after we talk in depth here regarding the debt service coverage. To talk about, Scott, I think you mentioned about an LLC. Is there one of the questions we have here, is there any seasoning on that LLC?
Nope, the LLC can be newly formed. Matter of fact, the majority of the closings we do are for LLCs that were really just formed for the purposes of this transaction to hold that piece of real estate in it. So the LLC does not need to be seasoned. It can be a newly formed LLC for the transaction.
And Alina, talk about 1031. That's another great question. Keep those questions coming in. This is being recorded. We will get this out to you before end of day tomorrow. But Alina, talk about 1031 exchange.
I'm not really going to get into the logistics of it because someone who does 1031 exchange is very well aware of the process, but we do offer that on actually all of our programs, not just investor cash flow, and you are able to close under the same LLC that the original 1031 came from.
Great, great. Hey, Scotty, you mentioned earlier about condos and reserves and non-warrantables. Talk a little bit more about condos and what type of condos and, you know, the short-term rentals, and if you can elaborate a little bit on that, because obviously in Florida we have a lot.
Yeah, condo market is huge. So a couple main points, actually. Let's start from the top, considering the environment we're in right now. Our non-QM condo approval or non-QM condo process is not the same as conventional. We do not have all of the new requirements that Fannie and Freddie have added on, both in documentation and just in guideline. Our non-QM condo process remains the same it's always been. Our condo questionnaire, we have a specific condo questionnaire for our non-QM programs would need to be completed. On our side, we have one review. There's no full or limited, it's just our straight non-QM condo review. And as we mentioned, we do the non-warrantables. So if you have 100% investor concentration in that specific building, we can lend in that building. In this case, let's say you're using live example, you're doing an 80% LTV purchase of an investment property and it's a condo, and the association in the current year's budget maybe is only collecting 6% reserve, so you're short of that 10. There are other ways we can meet that reserve requirement. And what we see is that most of these associations that are not collecting the full 10% in the current year's budget are not doing so because they have already previously funded accounts from previous year's collections. We can combine any funds they have set aside from previous year's collections with what they're collecting in the current year's budget to meet that 10% requirement that we need at an 80% LTV. So we're able to save a lot of condo loans, not just on this program, because that applies across the board on all of our programs. Once you're below 80% LTV, 75 to 80, we can actually do a 5% reserve requirement. And then once you're under 70 LTV, there's no reserve requirement for the condo association at all. So one thing that is important to keep an eye out on for condos, just something that could pop a red flag, is if the association has any restrictions for renting. A lot of times you'll see certain associations that'll say rental's not allowed for the first year. That obviously would disqualify that project from qualifying for this program since it's an investment property program, It's based on being able to rent it from day one.
Elena, anything else regarding condos? Or? Yeah,
no, he nailed all the information.
I'll add on there to address what I think might be a few questions. We do not do condotels on this program. So any buildings that offer short-term rentals or that you can basically go on a website and book a stay for a short period of time, a weekend, a few days, those would be buildings we do not lend in. We're looking at primarily straight residential condo buildings.
So, Alina, what's the requirements for source and seasoning of down payment and closing costs?
Sure. Across most of our programs, the assets will look at 30-day statements, source and season. As I mentioned before, this one has to be borrower's own funds. So for instance, if you're using business funds, we will look to make sure that our borrower is the sole owner of that business. Even if it's husband and wife, it doesn't matter. The wife will then have to go on the loan. But we do look at 30-day statements. The underwriters do have a right to question any large deposits and to source those as well.
Great. And Alina, I think you were touching on this. What about gift funds?
Gift funds are not allowed.
Right. Thank you.
It has to be borrower's own funds.
I'm sorry, Alina, what was that?
It has to be borrower's own funds.
Thank you. Scotty, you touched on LLC. Is there any percentage of ownership for that LLC?
Yeah, we allow up to a dual membership LLC. So in that case, you would have 50-50 ownership. In that event, both owners of the LLC would have to be on our loan. Other than that, if it's an individual owner, they should be 100% owner of that LLC. Couple other features I'd like to mention also, going back to the qualification, because we mentioned the program is based on the debt service ratio, obviously, and the rental income from the 1007 covering the proposed mortgage payment, or you can obviously use the option to waive it. But an important factor there is that we use 100% of the rental income from the 1007, not 75, it's 100% of that rental income. So that's key in knowing how this is qualified.
Yeah, so Scotty, give us an example. I know we use the ratio, 1-to-1 ratio. Give us like a real world, the rent comp analysis comes in at X, their payment with us is Y. Just hit on that. Yeah,
real simple. What we're looking for is, if we run the numbers on the proposed loan we're looking at, we have a mortgage payment of $2,500. A 1-to-1 ratio would be a 1007 rent analysis coming back at a rental market rent of $2,500. So they match 2,500, 2,500. That's a 1.00 debt service ratio. Let's say in the event the rental income came in at $2,250. What we're going to do is we're going to take the $2,250 divided by the proposed mortgage payment of $2,500. That's going to give us a debt service ratio of 0.90. In that case, we can still go up to 80% loan to value. As a matter of fact, we actually allow up to 80% loan to value down to a 0.85 debt service ratio. So in essence, you're looking at 15 bips below the actual proposed mortgage payment that you can go. And then obviously, if your rental income should come in even below that, and we're below the 0.85 debt service ratio, you can still do the loan by simply going 75 LTV if your borrower has a 700 credit score. And now it doesn't matter what the rental income came in at.
Right. Yeah, great point, Scott. So, it doesn't even have to cash flow in a positive manner for us to close your loans. Easy peasy, simple. Alina, talk about the transaction types we allow on the debt service coverage program.
Sure. Right now we allow purchase, cash out, in rate and term. And the most important one, as you know, in today's market, we do offer delayed financing. We see that a lot of the cash purchases, and we allow your borrowers to recoup that investment, and it would be treated under the purchase guidelines, even though it's a cash out. One little caveat that we added is that now we will even allow you to do delayed financing if you purchase the home using hard money lender. The only difference is from having to close and refinance under 6 months, this one is under 90 days, which is a great, great option for your borrowers.
Yeah, so in the crazy hot market we're all in, throughout the country, delayed financing is being talked about more and more. And, why lose out if you've been working with that borrower to and all of a sudden they can't meet that contract date and they have to do cash, why not miss out on that? You know, quite frankly, your commission on that you've worked so hard on, and get back with that.
Yeah,
Scotty,
John, to add on to that, if it's been 6 months, 6 months have gone by, you can do a straight cash out refi off of appraised value now on this program as well.
Yeah, and that's probably the last 3 or 4 months recent enhancement. So really why you need to stay in touch with Alina and Scott is because they're well aware and ingrained in all the enhancements we've had. You know, in the last 2 years, we've had over 40 enhancements. So Alina, I'll answer this. I don't want you to be next. There's one county we won't, is it one county in Florida, Osceola County? That we will not allow investment properties in. Hopefully, maybe someday that'll change, but it's based on previous history. So Ronald's asking how he gets signed up with Angel Oak. Ronald, I'll give you my contact information. It's either going to be Alina or Scott, but thank you for taking the time out of your day. Alina, talk a little bit about it. Scott mentioned interest only. Give us a breakdown of the interest only.
So interest only is going to be 6 months interest on excess of 20% of the original principal balance, unless obviously it's restricted by the state wherever you're doing the loan in.
No, I'm talking about how interest only, the first 10 years?
It's the first 10 years, correct.
First 10 years interest only, then it converts to a 30-year fixed. So a lot of savvy investors are using interest only because they're all about cash flow. We talked about it last week on our bank statement self-employed borrowers. Those are people who are really interested in cash flow.
And a lot of times we notice, John, that it's just a matter of offering it. Some of the end investors, the borrowers, don't know that that's even an option, or they might be programmed to think, oh wow, it's an investment property program with no verification of income or employment. They're not thinking, wow, you can actually do interest only. But yeah, you can add that interest only feature. And I mean, it's really just simple and dry. 200,000 loan amount. If your rate happens to be 4.5% of 200,000, that's $9,000 divided by 12 months. They're paying $750. It's that simple.
Yeah. Alina, just really getting some really great questions here, and you might have to refer to your matrix here. What's the minimum score for an 80% loan to value?
640.
Right.
So 600 is going to give you 70, and 640 is going to max it out at 80% LTV.
Yeah. So, and really one other thing I want to bring back here, if everyone remembers, it was probably April of 2021 when the government issued LLPAs on investment properties and second homes. We're talking just about investment properties today. And then they also instituted a 7% max portfolio could consist of second homes and investment properties. That went away in September. I'm telling you, it's going to come back, and it's going to come back. The government doesn't do things like that. They test it. It's going to come somewhere in 2022. So, as Ronald wants to get signed up with us, really get to learn these programs. And you have two of the smartest people who know investor cash flow, debt service coverage on this call. Scotty, talk about, I think, Alina, you touched on a little bit about the prepayment penalty. Scotty, talk about prepayment penalty. Why don't you just talk about it, Scott? I'll be quiet.
I got you. So yeah, the program comes with a standard option. No, it comes with a standard 3-year prepayment penalty. However, we offer multiple options. So let's talk about reducing the interest rate. Your borrower can take the option if going up to a 4-year prepay and reducing the interest rate by 1/8 of a point. So there's option number one. If you have a borrower that's buying a property, he knows he's going to keep it long term, he's going to rent it out long term, that's a great option. If you have other borrowers that may have other plans in mind, they can reduce the prepayment penalty from 3 years to 2 years, or from 3 years to 1 year, or they can buy it out completely. And we offer multiple options to be able to do that. They can do that by taking either bumps to the interest rate, or they can do that by paying a fee out of pocket as a discount in the closing costs. So that should never really be anything that scares away a borrower, because there's numerous options available to them to either increase or decrease the prepay.
Yeah, great stuff. Alina, talk about the, I know Scott talked a little bit, talk about how many units we'll go up to.
We'll go up to 4 units. Scotty mentioned that single family townhome condos we'll do 80% LTV. 2 to 4 units will go up to 75% LTV.
Yeah, so, and again, that's, I think Oscar was asking this question on here. So we'll go up to 4 units. We're still going to use the rent comp analysis on the appraisal to qualify that borrower for that property. So great questions coming in. Again, this is going to be recorded, and we will send this out. Alina, talk a little bit about the cash out, and not only just the cash out, the transaction itself, but what we can do for reserves on that also.
Sure. So cash out, one of the great new enhancements is that cash out can meet the reserve requirements. So that saves you the 6 months that you're required to provide in assets. One major thing I do want to point out to you guys, if you're doing a cash out on the property, it cannot be vacant. It has to be it has to be tenant occupied, not owner occupied. Sorry, it has to be tenant occupied.
Yeah.
Yeah,
so, and we'll talk about borrower paid compensation and lender paid compensation in a minute. We're gonna pivot here in another minute here to a couple of tools that we have available to you. So without further ado, because we're about 35 minutes past the top of the hour here. So Alina, take us through our great tool that we have available to everyone, and it's available 24/7 here.
Sure, quick call. So guys, please keep in mind that rates are subject to change and they're not guaranteed unless the loan is locked. So I would definitely religiously use this pricing engine for the most up-to-date pricing. I personally do not quote rates over the phone, but I'll be more than happy to stay with you and we can go through it. It takes a couple of seconds. And this is also the same tool that you would use to submit pre-qual documents over for my review or Scotty's review, so we can issue you a pre-qual. So as John pointed out, just a few questions that you asked. You put in the loan amount, the credit score, the LTV. Please make sure that you select the proper transaction type, and most importantly, the income type that you're using, which in this case will be DSCR, investor cash flow. It's not going to give you any rates until you change the occupancy to investment.
Right.
Changing the lock date is not going to change your rate. So you'll see on here, you requested 75% LTV. Based on the scenario that you provided, you're eligible to go up to 80%. Par rate is at 4.75, guys. 4.75 with 48 months seasoning for housing event and 6 months reserve requirement.
Yeah, so that's a 30-year fixed par rate, 4.75, and you know, that's what not providing any income, any job information, tax returns, lease agreement.
Nothing. Yeah.
Nothing. That's and everyone on this call, we are in a rising rate environment. That's pretty darn good rate right there. So, and then again, if you just change it to a cash out, one of the things I wanted to talk about, and Alina, maybe you could talk about the exposure or how many properties we're allowed, or if you want to touch on that point.
So one major thing is obviously, and Scott mentioned it earlier, we don't care about how many properties the borrower owns. There's no DTI, so you're not going to run into any issues. What we do care about is the Angel Oak exposure. And typically the rule of thumb is 5 loans or 3 million. But honestly, it's again, don't forget 30% is going to be case by case outside of the guidelines. So if you have a seasoned investor, and I've done that where I've done 6 loans for one borrower, and we had no issues proceeding, great credit, great payment history, plenty of assets and so forth, and we were able to assign one underwriter so you're not dealing with multiple personalities and go through all those loans at once.
Yeah, and that's a great point. And as Alina mentioned early on, and just mentioned again, 30% of the loans we close don't meet our guidelines. That's because Alina and Scott will work really close with you on reasons why we should do that loan. We had an AE also in Florida. She was able to get a 10-pack done on cash out because that borrower wanted to go out and buy additional properties with that cash out. So, you know, we have guidelines, but I mean, we know the appetite, what Angel Oak really wants, so we'll work closely with you.
And
so
we actually increased our cash out, by the way, up to $500,000 now from 300.
Great point, Alina. And I mentioned it earlier, another reason why to stay in touch with Scott and Alina is because they're on top of all the enhancements we continue to make, and as this industry continues to grow. So we showed you, hopefully you learned a lot about the program, how to submit a 1003 credit report. You see our quick quote tools. Scott, let's talk a little bit about how they can market themselves.
Sure. So we have plenty of tools available for you guys to market all of our products and programs. In this case, we'll go over specifically the investor cash flow, the debt service ratio. Guys, these marketing tools are 100% free to you as an approved broker with Angel Oak. If you're an approved broker with Angel Oak, you have your credentials, you can log into the portal, go right here where it says marketing portal. And as you can see, we have a number of different options. We have flyers, we have social media posts. We'll go over all of them, but let's start with the flyers. If you come here, you click on the investor cash flow flyer. There's a few different ones for investment property. They're specifically one for this program. And what you'll notice is that this flyer is going to go over all the highlights of the program that we just discussed. But the flyer, what's beautiful about it is it's 100% customizable. So with the section on the left, you will literally be able to upload your logo to the top corner or bottom of this flyer. As you can see, you can put your photo down at the bottom, all of your contact information and your company's contact information. You can even adjust and add your own compliance down at the bottom of the flyer. It goes over all of the highlights of the program, and these flyers are designed for you guys to be able to market this program to your referral sources or to the general public. Again, this is 100% free marketing to you. So you just simply come in here, customize this flyer, print as many as you want, and you can go to town with them. If you wanted to advertise on social media, which is a great medium nowadays to touch a lot of people, as you can see here, we have pre-made investor cash flow social media posts. We have some that are designed for you marketing to borrowers, others designed for you marketing to realtors or referral sources. Picture is already kind of pre-canned. It's literally cut and paste or copy paste. And even the verbiage beneath it is cut and paste. So you can just put your little post up using our verbiage or use it as a baseline and maybe edit it however you'd like. The point is that all of these tools are here for you where literally within the matter of minutes, you can go and put up a social media post on any one of your platforms and get the word out about these products and programs to a huge audience of people. If you wanted to use some of the whiteboard videos, for example, everybody has seen these cool whiteboard stick figure videos. We have one for each one of these programs. These, I think, are something really cool to put on your own personal website, or if you have a YouTube page, you can even post them on Instagram or any of those. And we've all seen them. They're pretty cool. They're narrated. They make no mention whatsoever of Angel Oak Mortgage Solutions. These are basically videos designed for you to be marketing to referral sources or borrowers individually. And then lastly, we offer PowerPoint presentations. So if you wanted to set up a specific presentation to a room of realtors or referral sources of any kind, you could literally take this pre-canned PowerPoint presentation, you can customize it to have all of your contact information and logos on every single page. You can even customize the content of it and use that to go spearhead your presentation, organize your presentation to your referral sources. Beneath it, you'll notice we have a flyer, an event flyer. You could use that flyer to promote that event. So you can literally just plug in your information, put the flyer out to all of your referral sources. Hey guys, you're invited to a presentation to talk about non-QM products and programs and no income verification investment properties. Generate that buzz, get a bunch of people to attend. We, the account executives, myself, Alina, or any AE from Angel Oak that you work with, will even come onto that presentation with you as your investor, your partner, your underwriter, whatever you want to call us, and we would be more than happy to speak on your behalf to your audience about these products and programs. Yeah, so all the tools for marketing, they're right at your fingertips, guys. This is invaluable free marketing material available to you.
Yeah, so Scott's not going to brag about himself, or Alina's not going to brag about herself. I will tell you that presentation is the most powerful presentation of content you can deliver to a room full of your referral sources. And I promise you, it's happened to Scott and Alina before. If you get at least 10 realtors in a room, they'll not only talk about this investor cash flow program, they'll talk about all of our programs. And I'll promise you will get one loan from one of those one of their own personal loans from one of those realtors out of that presentation, and then you'll solidify your relationship with that realtor. Yeah.
I wanted to add something. Yeah, sure. I wanted to add one more thing to the flyers. As John mentioned earlier, we've had 40 enhancements so far, and Scotty and I communicate that very clearly to you guys. So keep an eye out on this so you're using the most up-to-date information to help you capture more business, not an older flyer. And also, one of the more personalized cool features, I think, is if you have a referral partner that you're working with, you can kind of do double marketing with your contact information, and then there's space to also add your realtor's information partner as well, so you both can kind of double tag team and target the borrowers.
Yeah, Alina, and one of the things I want you to stay on point here, because Luciana is going to remind me that, part of that debt service coverage program, Alina, if you could spend maybe a minute just talking about the foreign national here for us, please.
Sure. Foreign nationals basically has the same concept as the regular DSCR. It falls under the program. This is specific for your foreign national borrowers. It is not someone that's living in the U.S. and does not have a status. It's someone that lives outside of the country. Minimum loan amount, the same guidelines will go up to 1.5 million. DSCR ratio is 1:1. The major difference here is going to be we'll look at 12 months reserves from 6, and we look at assets to be sourced and seasoned 60 days, and 30 of those have to be in the U.S. FDIC insured bank account. We also require ACH out payment, or the loan is going to be ineligible. John mentioned earlier we will not lend in Osceola County, and we do require the borrower to have one of their required visas listed unless the borrower, the country is on visa waiver. And as an FYI, someone from Canada, they're not on visa waiver and they're not required to have a visa status. Also, no gift funds allowed.
Yeah. So Luciana, sorry, Scott, did you want to say something?
Oh yeah, I just wanted to kind of tag in on the foreign national program. We're getting a lot of traction on this program since we rolled it out. And it's because, if anybody's done a foreign national before, you guys understand how much of a nightmare and a headache it can be from a documentation standpoint. Your normal foreign national program is in essence a quote unquote full doc foreign national, where you're literally having to verify income from the other country, assets from the other country, any real estate owned from the other country. You need CPA letters, in some cases employment letters. All of that goes away on our foreign national program. It's literally a straight debt service ratio program for foreign nationals. You're in essence, if you go over what Alina just said, you have 2 requirements, the visa and the assets. And that's literally it. That's all we need. Nothing else is required other than the rental income from the 1007 to cover the proposed mortgage payment.
Yeah, so Luciana, hopefully that gave you a great overview. Again, working with Scott or Alina, they're your Broward County experts in non-QM, and they can really, really help you grow your business. Alina, anything in closing? And we'll throw it back over to you, Mike, here in a minute. But Alina, anything in closing?
This is the DSCR Investor Cash Flow is honestly one of my favorite programs. If you're not pushing it, please push it. It's super easy to close. It moves extremely fast. It has a couple of checkpoints that the borrower has to check off, which is what Scotty and I will be reviewing for you. Even the conditional approvals have limited documentation, and with the way that the market is, and as much as we've seen on the investment side, and on the conventional with, the visa being increased and so forth, definitely take advantage of that.
Scotty?
John, I have one more to add that I failed to cover earlier, important point. 6 months reserves only on your subject property on this program. I think that's an important detail for everybody to know. So your borrower could own a primary. Your borrower could own 4 other investment properties. It does not matter. When we're qualifying the loan, it's only 6 months reserves on the subject property. That applies to foreign national as well, which would be 12-month reserves only on the subject property.
Yeah, so just, before I go over to Mike, you've seen it here today. You get to work with Scott Gravel, Alina Doge. They are the best in the business, and if you're trusting anyone with your business, trust it to them. They know this inside and out. They have experience. They know how to close loans, and I'm just honored and lucky to work with them. They're like my kids. I mean, I love them to death. You guys, you should be honored to work with them, and that's all I'm going to say. I'm going to throw it back over to Mike.
Thanks, John.
Thanks, John.
Hey, great job. Hey, real quick, I don't, maybe you answered this already, but I do see a question that asks for the max LTV on Foreign Nationals on that Foreign National program.
70% the cash out, it's going to be 65.
70%, 65 on a cash out. Thank you, Alina.
Fantastic. Guys, again, thank you for everyone who attended today's call. Thank you, Angel Oak, for a tremendous presentation. We're doing it again next week, so mark your calendars for February 16th, same time, same place, right? So we've got another great presentation. John, what are we covering on that call?
Yeah, Mike, we're going to be covering full doc loans. We talked, the first one was self-employed bank statements. Obviously, this one was investor cash flows, debt service coverage. So we're going to talk about full doc, and you might want to say, well, full doc, I'll go agency. Scott and Alina are going to give you some tips and tricks and things to look out for us to close your full doc loan. So really come join us next week. This is fun. Thank you for having us, Mike.
Absolutely. Thanks again. They're also going to be one of our VIP sponsors at an upcoming trade show on March 9th. I'm not going to steal your thunder, but they got a fantastic poster featuring these two rock stars. So I can't wait for everyone to see that. You guys did a great job. So thank you. Thank you again for being a great supporter of the originators of South Florida and beyond, right? So we appreciate it, and we will talk to you again. If there's no other questions, then I think we're done for today.
Thank you, Mike.
If we missed any, Alina and Scott will reach out to you guys. So thank you.
Thank you, guys.
Thank you, everyone.